Crypto Kids, welcome back to another video. In today's video, Bitcoin is forming this descending triangle, which could break any minute now, especially coming up towards the FOMC, which is in 9 hours and 55 minutes. I'm going to be live streaming this on my channel, so make sure to turn on the notification bell to not miss on that live stream. Usually, Bitcoin faces a lot of volatility during FOMC events, and we're going to be streaming the entire thing, so make sure to stay tuned until that time. However, Bitcoin has a lot of liquidity between $36,000 and $38,000. So if Bitcoin breaks down from this descending triangle, then that could be a potential place where we start taking profits if we open a short position, which you'll find out in the next couple of seconds. The Bitcoin open interest is still very high at $11 billion, and that could be another sign of a reversal, continuation of the reversal back down. The CPI data came out yesterday. We'll discuss that, and we just have a bunch more news to go through, on-chain data, economic data, charts, and yeah, it's going to be an awesome video. So stick around until the end, ladies and gents. Let's cue in the intro first and then jump right in to the Bitcoin technical analysis. All right, ladies and gents. So the first thing is first, let's have a look at Bitcoin. Now, this is usually bearish, especially if we come after a bearish move towards the downside. So I am planning on opening a trade here. We already have a long position, a conditional long position set if you watch the previous update video, because if we zoom out to the weekly time frame over here, or in fact, the daily time frame will be a bit more appropriate, we can see that we're in a broadening wedge right over there. So what I did was we discussed that a potential longing opportunity can come around if Bitcoin comes back down to the support of this broadening wedge at $38,000, which is why over on Bitflex we opened a conditional long order right over there at $38,000 with a 0.13 Bitcoin position. So that's what we've done so far. And now, ladies and gents, I'm planning on opening a short if Bitcoin breaks the support of this descending triangle, which I will set very quickly, and then we'll go into all of the data which will back up why I am doing this. So the first thing is first, let's find what exact line that we need to break here. So this is going to be the support line at $40,700. If we go below that, potentially to 40,600, it could potentially be a good time to open a short position, and that's why I'm gonna set one right now. So $40,600, and we're just gonna copy paste that in there. So $40,600. It's gonna be a conditional order, meaning if it's gonna open only if Bitcoin comes down to that level and we can find liquidity, hopefully it will fill. So that's what a conditional order is, and it's super to set it up on Bitflex too. So I'm gonna do a not too big of a position. I'm gonna go about $750 here with 5x leverage. So it's not gonna be crazy. And if we press open short, perfect. That's exactly what I want. 5x leverage, confirm. So we have an open short order if Bitcoin ends up crossing below this $40,600 level. And I will put my take profit probably at around 38,000 because that's where all of the liquidity is at and Bitcoin can trigger it. So if this position opens, I will add my take profit and stop loss. So for that, if you want to find out earlier and if Bitcoin breaks down earlier than the FOMC live stream, then what you can do is you can go to the description below and go to my free Telegram channel, because if we see an update, then I will post it over there. It's completely for free, and it's just something that I have for the Crypto Kids community. So perfect. Now that we have our trade open, I want to claim my flex points as well before I forget, because I always forget. What you can do here is you can go to the rewards hub and check in so I can claim my flex points, because I'm saving up for the iPhone because I cracked the back of my iPhone last week, and I need to save up around 280,000 flex points, but we'll get there in time. And if you want to save up for any of these items too, from just completing daily challenges and claiming the flex points on a daily basis, then you can sign up to Bitflex using this link. And actually, there is now you can get up to a $68,888 dollar rewards from the flex shop itself. So check it out. It takes 20 seconds to sign up, and let me know what you guys claim in the comment section down below. But let's go into Bitcoin, right? So we discussed this broadening wedge forming, but the most important thing is the FOMC coming up today. Now, what are my predictions and expectations from the FOMC? Well, looking at the CPI data, the CPI, the core CPI, is what's more important because we exclude, the things that are more volatile like energy and food, etc. This is the metric that determines what the inflation rate is going to be. So if we go to the core inflation rate, we can see that it stayed the same exactly. However, what did change was the housing. So core services excluding housing, and the services include transportation and healthcare, right? So if we see this, it's an essential one that the Fed uses to determine what the interest rate is going to come out, and it's just been increasing. So I'm not expecting the cuts coming this year at all. I've been mentioning this. The cuts are probably going to be coming up in March of next year, and what this means for the economy is that when there is an interest rate cut, people are less incentivized to keep their capital in the bank to earn an interest, take it out and actually spend it on goods such as Bitcoin, invest it in the stock market. That is why interest rates are super important, so that the more that they are low, the more that the economy, people are spending in the economy, and assets such as Bitcoin can continue going towards the upside. That is why the FOMC is very, very significant, and we need to be on the lookout for it, right? So this metric is not the best, and honestly, I've posted this thread on Twitter, and it got a lot of views. The media is outlining the phrase soft landing, and I went back on Google and searched for articles prior to the 2008 global recession, and in 2007 all of the media outlets were saying, oh, the economy is going to have a soft landing. Guess what? We had a massive, massive global recession. And the exact same thing is happening here. I mean, the US just passed a $33.9 trillion national debt. And in terms of the treasury yield curve, the current short-term treasury bonds are bringing more returns compared to the long-term ones. And in basic sense, what does this mean? Well, if the short-term bonds bring more return than the long-term bonds, this can indicate an economic downturn. And next year, people are expecting a recession. So let's see what happens. It's going to be election year too, so the Fed is going to try and cut as much as possible to make sure that the elections go smoothly. So there is going to be some pressure over there, but honestly, I don't think the U.S. economy is going to do too well. However, the stock market has been going crazy. I mean, even though we have all of this bearishness, the stock market has been creating a 1, 2, 3, 4, 5, 6, 7 weekly increase, which is very, very crazy and super unexpected, to be honest. And it is a pretty resilient market. We got to give the U.S. stock market that. Like, look at this. We have, we have everything. Fed rate cut expectations pushed back to May of 2024. Oil prices rising. Treasury real yield curves hitting their highest in 10 days. And it's just all of this bearishness going on in the US economy, but the stock market is still doing well. So that was pretty interesting, and I wanted to share that as well. But this data I also found pretty significant, because of course we have the CPI, which is of course not correct, suggesting that inflation is at 3.1%. However, insurance inflation is up to 19.2%. We have transportation inflation 10.1%, car repair inflation 8.5%, rent inflation 6.9%, etc. Right? So all of these indicators are much higher than the 3.1% outlined. And look, the reality is, if you go to the supermarket, grab your box of orange juice, and look at the price, it's not going to be 3.1% higher compared to the price last year. It is way higher. It's like double the price. So it's unfortunately not a realistic metric, but that's all we have. Inflation is there, and the dollar is losing value. So it's not looking too great, but that's good for Bitcoin, because historically we know that whenever the dollar devalues, because of course you trade Bitcoin against the dollar. So if the dollar loses value, then Bitcoin's price should technically go up, right? And if banks go in trouble or anything like this happens, we know historically that Bitcoin goes up. And Bitcoin was invented by Satoshi Nakamoto to prevent a situation like the 2008 recession. It was created exactly after the 2008 global recession to prevent an event like that. And Bitcoin has not experienced a full-fledged recession. Yes, we had the COVID dump, but that was like a flash crash, which rebounded. And I can show you that very quickly. So we can go here on TradingView onto the monthly time frame, that on 2020, yes, we saw Bitcoin dump all the way to $3,900, but we rebounded straight after. So I don't think that counts as a recession at all. But the last thing that I want to mention before I end off this video is that we can see here comparing 2017, where we had 8 consecutive green candles on the weekly time frame. Bitcoin saw a 40% drop towards the downside. And I know I talked about this beforehand, but I just wanted to create this comparison because I have my tweet here, and it talks about after the last seven or eighth consecutive candle increase, we dumped 39%, and I'm expecting Bitcoin to come potentially even all the way down to 31K. There's one difference, right? There is one difference. And the significant difference for Bitcoin currently is that, well, this was post halving, right? So this was post halving. Right now, we're pre halving. And the difference is that usually, yes, we can see these corrections in the pre halving, but in the post halving, Bitcoin just keeps on going up, right? Bitcoin just keeps on going up, and the ones in the pre halving can be a little bit more, it just can be a little bit more dangerous, right? So that's the only difference. However, as I always mention, the 31K is going to be like that's the final chance, in my opinion, to buy up cheap Bitcoin. Because honestly, I don't think Bitcoin will see 31K ever again if we come down and rebound towards the upside. Ladies and gents, that's pretty much it for today's video. I'll just mention the breaking news very, very quickly. This was pretty bullish because Japan, I think the Japanese government, this is actually Japanese article, which was translated into English by my Brave browser. So it's the wording is not exactly correct, but so what they're trying to do is Japan and Saudi Aramco, the biggest oil company in the world, they signed an MOU for digital asset investments. So that is very, very bullish and very, very interesting. And the second breaking news, this was yesterday, but like Cathie Wood is dumping some of their Coinbase shares. Now, Coinbase is the current ETF of our market, right? So until we have the spot ETF, basically the MicroStrategy shares and the Coinbase shares are inacting as that current ETF. So if we have a look at Coinbase, it's been going up drastically. It's gone up by over 328% in the last year. So that's higher than what Bitcoin has done. And I think that's why they're taking profit. I would personally take profit too. But Coinbase isn't going anywhere, in my opinion. All of these spot ETFs are going to have their underlying assets in Coinbase. So Coinbase is not looking too shabby at all. But ladies and gents, that's pretty much it for today's video. I hope you enjoyed it. Make sure to stick around on the channel. Stay tuned because at 11 p.m. Dubai time, I'm going to be streaming the FOMC event, and that's going to be very, very cool. So guys, see you all in the next video very soon. Take care and bye-bye.